Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends, and most importantly, we will be addressing your queries during the show. So please keep commenting on our feed. We'll have your questions addressed towards the latter half. But let's kickstart the show and see what the global handover looks like. Cooler than expected inflation data for November sees Wall Street close with gains, but significantly off day's high as investors look ahead to the Fed's rate policy decision later today. A 50 basis point hike is widely expected, although comments from President Biden indicating that inflation will take time to stabilize spark some caution. Stocks in the Asia-Pacific rise on a strong handover from Wall Street as inflation cools in the United States. The SGX Nifty 2 indicates a higher start for the Indian market. European markets rally as the US inflation came in lower than expected. British pound hit a 6-month high. Back home, as consolidation continues, are better times ahead for the cement industry. Stocks in the spotlight today are Paytm, IIFL Wealth, TVS Motor and CropScience. Okay, let's get going and talk about the markets with Heymen Kapadia of KR Choksi. Morning, Heymen, and thanks for joining in. What are the indications you're getting from the handover from the trade setup as far as our own markets are concerned?
A very good morning to you, Karunya. Thank you for having me on the show. Frankly speaking, Karunya, there's a lot of resilience. We've had a brilliant run-up, and frankly speaking, we should have had a slightly deeper correction. One does not wish for a deeper correction, but if you, let's say, move to 1,000 points, a time and price retracement would make the market healthy enough for the next up move. Now, we've seen a correction. It's not that it didn't happen, but from 18,888 to 18,350, that's just 550 points. That's probably not enough, but more importantly, it also underlines that there's a lot of resilience. The undercurrent is strong. One would have wanted a little bit more participation from the small caps to improve the advanced decline line, Karunya. But Bank Nifty is in a orbit of its own. The laws of gravity don't seem to apply to it. Another thing is the VIX has gone below 13, Karunya. So frankly speaking, it is a clear support to the bulls, because if we expect the market to get a bit wobbly or walk into a bigger correction, you need a VIX at 17 or 18. So sub 13, frankly speaking, even sub 15 VIX, everything seems to suggest that yes, India stands out among the world markets. And looking at the setup even now, I think it continues to stand out, Karunya.
Okay, all right. Let's straight talk about all the stocks that could be in the limelight today on back of news flow, and we're already getting a lot of comments on Paytm. So let's kickstart with Paytm only. Last night they've informed the buses that their buyback plan is in place. They've approved a buyback of 850 crore rupees at a price of 810 rupees per share. They've also reiterated that the proceeds from the IPO will not be used for the share repurchase. They've also highlighted how the management is confident of generating healthy revenue as well as cash flow to invest in future business expansion, whether it's sales, marketing or technology. But the stock has performed otherwise, Heymen, in the last few months. In fact, a massive wealth erosion has happened for those who subscribed in the IPO itself. So talk to us about Paytm and what investors should do, because already a lot of questions coming your way.
Well, frankly speaking, Karunya, it's a Hobson's choice, honestly. Like you said, huge wealth erosion. I mean, since listing, we've seen lower tops, lower bottoms come in as far as Paytm is concerned. Things haven't improved dramatically from that point of view, but yes, just a couple of technical green shoots, Karunya. Firstly, we posted a short-term bottom. And there is, okay, but short-term means the daily chart, so frankly speaking, the shelf life would be less. Ideally, we would look and expect, or, want a medium-term bottom for something more concrete to unfold. So yes, short-term bottom in place. Medium-term bottom, we seem to be stabilizing. In terms of levels, 500 is important and 440 is the recent all-time low. So that is crucial. Having said that, this week, we are still on Wednesday. So we've just seen 2 trading sessions, Karunya. In the last 4 weeks, volume is the highest since March. So I believe some informed buying has happened over the last 4 weeks, and we've seen significantly higher volumes, 4 crores, 6 crores, 8 crores week on week. So I believe that the market, Paytm is trying to stabilize. If you have the stock, uh, you're stuck with it, hold on for some more time, keep the levels I mentioned in mind, 500 and 440. And if we close above 550 on the weekly chart, that would be the first indication of a medium term recovery. Fingers crossed, things look just a bit better, but these levels need to be respected and overcome. Tarunja.
Okay, understood. Let's also talk about IIFL Wealth Management then. Again, General Atlantic Singapore has offloaded 564 crores worth of shares in IIFL Wealth. At the same time, there's a buyer as well in the transaction. Capital Income Builder has bought 30.4 lakh shares for 1,810 rupees a piece. Now, a big name actually offloading a massive stake in IIFL Wealth Management could see some reaction today on the stock price, and not just today, but if you could give us a forecast of the next few days or weeks.
Yes, Karunya, I believe that would make an impact, no doubt. But the stock seems to have gone into a hibernation of sorts, Karunya. Almost 13 weeks, almost 13 weeks. We've been in this range between 1700 on the downside and 1945 on the upside. There is no trending bias. In the sense, it's completely flat. So if we were to expect any significant reaction due to this development, either we need to break 1700, which it hasn't done for the last couple of months, or we take out 1945. So frankly speaking, yes, it would impact, but we've been here. So until these levels break, I think we'll continue to remain in this range.
Okay, all right. How's TVS Motor looking? They also came out with an announcement yesterday that they're looking to launch Euro 5 two-wheelers in Turkey. And not just that, but they're looking at expanding their portfolio in the Turkey market with products like Jupiter, Ntorq, Race Edition, etc. So let's talk about TVS Motor and whether it has more steam left for an upside.
Well, if I look at the slightly longer term charts, the setup is fine, Karunya. But the stock goes from 240 to 1170 over 2 years, 2.5 years. It's obvious that it needs to correct a bit. Having said that, there's an 8th week in a row we're down from the high. This obviously the week is not yet over. We're still on a Wednesday. There's the 8th week in counting. Having said that, on the shorter term charts, there is stability coming in. 1010 needs to hold. The 55-day exponential moving average comes in at 1054. Succinctly put, stability has come in on the short-term charts. Long-term charts, though corrective, are stable in the sense the uptrend is still on. We are seeing a short-term bottom, which simply translated would mean a bounce is around the corner. The medium-term picture is corrective, so the recovery might not make a new high, but as of now, the short-term picture has improved.
All right. Okay. The last stock on our list is Bayer CropScience, and not so good news coming in there for the company. They've temporarily discontinued their operations at crop protection formulations based in Gujarat, and this has happened after directions came in from Gujarat Pollution Control Board. So some temporary trouble coming in for Bayer. Talk to us about how the chart is looking, and how the stock may or may not react today.
Major reaction would obviously be negative, Karunya, if it's a major development like this. But frankly speaking, the stock hasn't gone anywhere. In the sense, we peaked at 6601 in September 2020. Since then, we've gradually drifted down. So yes, the downside hasn't been much, but it's gone nowhere. So having said that, currently it's 4500 and 4850, the range that we're looking at. And despite this despite this negative development, if it doesn't close below 4,500, I'd say we'd still be over here. But yes, there has been some underperformance over the last 2.5 years, which doesn't seem to be in a mood to go away, Karunya.
Okay, all right. Well, that doesn't seem very encouraging. I hope the investors of Bayer are taking note of this. Hemin, request you to stay on with us. I want to shift gears and talk about what's happening in the cement space. Lots of action happened, especially the year has been quite exciting for the entire sector. Sachin Pal joins us from Moneycontrol Pro to talk to us about what lies ahead for the industry. Morning, Sachin, and thanks for joining in. Very, very exciting year for the cement industry. Earlier this year, we saw Adani flex its muscles and pick up that stake in ACC Ambuja. And now, just before the year closed, you have Dalmia Bharat buying JP's assets. Talk to us about the consolidation taking place in this space and are better times ahead for the entire industry and most of these companies in the listed space?
Yeah, hi Karunya, good morning. Thanks for having me on the show. Yeah, so it's been a very eventful year for the cement industry in general, especially 2022. Earlier this year, we had Adani taking over the control of ACC and Ambuja in the landmark transaction, which was valued at almost $10.5 billion. Again, just a couple of days back, Dalmia announced the acquisition of JP Associates, which again is a capacity of around 9.4 metric tons, and which gives them a significant headroom in terms of the control over the central region. So far, they have had just primary presence across the eastern as well as southern markets, and virtually no presence on the central side. So this acquisition is very strategic from that standpoint, and it also aligns well with their strategic goal of having 110 million capacity by FY31. So there has been a lot of consolidation that has been happening across the entire cement space, and this is not just 2022. Over the past few years as well, there have been a lot of companies which have taken over capacities. Earlier, Binani was taken over control by the Ultratech group. Even Dalmia was active on the M&A front. They took over Mulli Industries as well as Kalyanpur Cement through the NCLT process. So it's been a pretty active space in terms of M&A. And the larger players are in fact getting bigger and bigger, and the smaller ones are getting squeezed out of the space.
Yeah, but what does that say about growth potential for the behemoths and even for the smaller players? Do you see more potential for an upside if one looks at purely the company's fundamentals, the sector fundamentals, and valuations?
So from a sector perspective, the cement sector has been really under a lot of pressure in terms of the input cost prices, especially the pet coke and the coal prices. So far, the industry has not been able to pass on the prices that they have been facing on the input cost front, and therefore there has been a lot of squeeze on the margins. Even if you look at the numbers of the Q2 margins as well as the Q3 numbers, so you will see a lot of compression in terms of the operating margin from what they reported last year and even 2 quarters back. However, that seems to be abating a bit. So the fundamental are slightly on an uptrend since the pet coke prices have also corrected a bit, and also we are moving into the peak season of construction on the execution front, project execution front. So that should also help alleviate some pressures on the margins front as well. So a lot of companies should move into the better territory on the margins front and should improve the margins going forward into Q3 and Q4. From a demand perspective, things appear very stable. We've had a lull in the demand front around Q1 last year. And again, with the election seasons coming up, we expect the project execution and the government spending will again pick up, and the infrastructure remains the core focus of the government as well. So that again bodes well from the cement sector as a whole. From a valuation standpoint, there are a lot of things that need to be considered across. If you take the case of Ultratech, that trades at almost 16, 17 times EV by EBITDA. So that doesn't leave much scope of error in terms of execution. And for the entry of Adani into the sector, a lot of things could shake up into the sector in the next 2 to 3 years, because they've already carried their ambitions of being the number one player in the next 5 years. So a lot of players could get the heat of the competition increasing in the sector as well.
But by when do you see earnings recovery happen for most of these players, and any winners or any potential winners that you guys have sort of highlighted that you want to highlight for our viewers?
So Dalmia Bharat has always been our favorite pick from the sector as well, and it was again in a line to the acquisition of JP Associates. The stock has run up a bit in the last 4-5 months as well, and the valuations seem to factor in the near-term positives. But overall, the balance sheet is in very good state, and that really catapults them into being able to achieve the capacity of 110 metric tons by FY31. Even from a near-term standpoint, the balance sheet might be constrained because they are already going a lot of expansion on the east front, so the cash flows remain constrained. So the stock might be under pressure if there is other concerns on the balance sheet front from a near-term perspective. But the long-term fundamentals of the company as well as the industry are very solid, and therefore any opportunity in the stock should be used for buying across. On the small or the mid-cap space, we really like Heidelberg Cement. And again, a very strong company with a very strong balance sheet and primarily operating in the central region. Last 3-4 quarters have not really been very good for the company in terms of fundamentals as well as operational performance. However, like the structure of the market as well as the market presence which the company holds in the central region puts them in good state from a long-term perspective.
Okay, Sachin, thank you so much for joining in and sharing with us what's going on in the space and how things are likely to play out, and which stocks has MC Pro identified as their preferred bets as far as cement goes. Okay, moving back to Hemen once again. Hemen, want to carry on the cement chat with you as well. Now, today we have Ultratech Cement, which could hog the limelight. They have amped up their capacity by 1.9 MTPA. They've commissioned another 1.9 MTPA greenfield clinker back grinding capacity in Rajasthan, which augurs well for the company because good sign as far as capacity expansion goes, and probably gives us a sense of how the demand is also there, that the company wants to ramp up their capacity. But how's Ultratech looking, or if you have any other favorites in the cement space that you want to flag off?
Ultratech normally leads the market, Karunya, as far as the cement stocks are concerned. And we seem to be in a good place as of now. Series of progressively higher tops and bottoms, and even now the setup seems convincing enough. And even the longer-term charts, Karunya, monthly chart, there were some crossover shells coming in by some of the mechanical indicator that has slowly and steadily changed. So setup is good. So yes, I think Ultratech looks good enough. And I think your analyst on Moneycontrol Pro mentioned Heidelberg. Now, Heidelberg looks very interesting. We've been consolidating for 4 months now, Karunya. 215 is a breakout level. So Heidelberg, I think, looks quite promising. Yeah, yes, it hasn't moved. It has underperformed. But I believe that when it starts moving, it will make up on lost time. And the second pick would be Birla Corp. So both of these stocks look quite promising.
Okay, all right. Let's address some of our viewer queries also, shall we? There's a comment coming in from Prabhu, and he wants you to tell him about South Indian Bank with a long-term view. How is this one looking?
Okay, I think most of these banks have shot through the roof, so to speak. Okay, it's more than doubled. It's more than doubled in the last couple of weeks. Last few months. Sorry. So frankly speaking, we posted a fresh 3-year high. Outlook remains positive. Long-term view, I think we should be heading somewhere towards 26, 27, the way I see it from a longer-term point of view. Extreme near-term, we've gone up very sharply. So I'm not sure how much sense it makes if there is a fresh entry. Otherwise, hold. In terms of levels, support comes in at 1850, 17, 15.15. And like I said, first headache at 22.85. Otherwise, one can expect 26, 27 over the slightly medium term to longer term point of view.
Okay, all right. There's another banking related query that's coming your way. Sushant is asking us about Yes Bank. Now, this one has not just gone through the roof, but how, especially in the last couple of days. Now, of course, we know that there is a fundamental trigger in place. They will be getting in fresh investments from Carlyle Group, Venta Holdings. They'll be picking up 10% stake each in the company, in the bank. But if we look at from these levels for Yes Bank, where do you think it's headed and how much more can it expand?
$1 million question, Karunya. Frankly speaking, the past performance for the last couple of years has been disheartening. Okay, now that's history. Having said that, we formed a 2-year rounding bottom in the bullish formation, Karunya, as you know. So, one, not short, not medium, a long-term bottom is very clearly in place. The level to watch out, from my point of view, is 17 was important and 20 is even more important. So we're comfortably above these levels. So frankly speaking, worst is over. We are moving towards 30 and more. Little bit of trepidation because it's disappointed multiple times in the past. It's a question of cry wolf. This time it looks like the real thing. Technical setup has improved. It's probably in the best technical situation it has been in the last 2.5 years, Karuna.
Okay, all right. Moving on to the next question from Vignesh. He wants your advice on Sun Pharma. Now, yes, I mean, most of the people we've asked about Sun Pharma lately has been rather cautious. But all said and done, the stock has still yielded 20% upside this year. Does that provide a good time to good opportunity for people to book profit and exit, or should they stay invested after having made these 18 to 20% gains?
Well, frankly speaking, we remain safely ensconced in a longer term uptrend, Karunya. We probably have been, we posted a bottom at 312 in March of 20. I think the whole market bottomed out on 23rd March. So no exception over there. Yes, there is an overbought situation. We've had a humongous run up. So if I were to say partial profit booking can't hurt somebody, take some money home. In terms of levels to watch, 966, 875 are supports, 105, 1075 is resistance. So partial profit booking, let's hold on to the rest because the long-term uptrend still seems very much in play, Karunya.
All right, okay. Narayanan is sending us a query. He's purchased 2,000 shares of Wipro at 650 rupees a piece about a year ago. Now that it's trading below 400, 390 actually, is Wipro worth holding? That's the query. So do you think he should exit, book his losses and probably cut his losses if the stock could go down from here on? Or should he average given that it's below 400 rupees odd?
I would suggest hold right now with no particular action in play. I believe a medium-term bottom is in place, but the longer-term picture is still not very inconclusive, not only for Wipro, the entire IT pack. Nasdaq has also posted a medium-term bottom, the long-term picture question mark. Nifty IT index, similar story. A bounce is around the corner if he has the patience. If he can hold on for 2 years, I know there could be a little bit of pressure in those 2 years, but if his holding period is 2 years and he's comfortable with that, then it's a hold and an average at lower levels. If it's a shorter term time frame, it's a sell on bounce, Karunya.
Okay, all right. Moving on to another name again from the IT space, from the mid-cap space rather. Amit is asking us if it's the right time to accumulate LTI Mindtree at the current price, or should one wait for further dip, if at all, that's likely to happen?
Well, frankly speaking, the setup has been spoiled over the last few weeks, Karunya. Lower top, lower bottom on the weekly chart, indicators giving a sale. Okay, it's fallen off a cliff from 5,100 to 4,300. I think 8-9 trading sessions one way. Oversold, a bounce is around the corner, but coming back to the main question, I would prefer to wait a bit. The setup has distinctly got spoiled, and except a short-term bounce, the picture remains murky with a negative overhang. I'd stay away from the time being. Maybe he can, repeat this question maybe a month or two down the line on the show, Karunya. That would be helpful.
Okay, all right. Moving on then, Naveen's comment is something I want to flag off. He is concerned about investing in Praj Industries. What would be your advice here?
Well, frankly speaking, it's 1.5 years and it's done nothing, Karunya. And okay, the longer term setup, if I look at the yearly charts, it's fine. But 1.5 years is an awful lot of time where it's done nothing. Short term, there is a distinct negative bias, but the bigger picture remains stable. 290 and 461 is the range, and we've been in this range since the weekend at 14th May, Karunya. So 1.5 years and we've gone nowhere. So if he is patient enough, the long-term picture seems to suggest that things are fine. If he's patient enough, it's a very clear hold. If there's a near-term view, I guess you'll have to exit. No two thoughts about that.
Okay, all right. Moving on to the next question. This is from Funny, and he wants your advice on a fresh buy on Adani Power versus JSW Energy. Now, two stocks from the energy space. How are they stacked against one another?
Adani Power and J-Power and JSW Energy. Okay, I think JSW Energy has given a decent time and price correction. Adani Power has corrected. It's not that it hasn't, but I believe I would be slightly more comfortable with JSW Energy, Karunya, if I compare both the charts, because it's consolidated for some time. There is support at lower levels, doesn't want to break 290, and it's taken 4 months to correct, but doesn't want to go down much. So I'd prefer JSW Energy, but not at one go. He can spread it because the weekly picture still remains having a negative overhang.
Okay, all right. Now, Ashok is bought LIC in the IPO. He wants to know whether he should exit or stay invested. Your view?
I think he should stay invested. Firstly, a small caveat, simply because I don't have too much of data to take a longer term view. Yes, it's been listed for around 6-7 months, no doubt, but a few years would be ideal to take a longer term view. But having said that, with whatever limited data that we have, we've entered an intermediate uptrend. And this is the first time since the listing that the technical setup has seen such positive moves. So, terms of level 724 resistance followed by 800, support at 670, 650. Hold weekly close above 724 should trigger off a further upside. Despite what has happened after the listing, technically it's in the best place since the listing currently.
Okay. Another name from the broader markets I want to pick up is Gravita India. This is a query coming in from Rajiv. What a phenomenal uptick seen last 5-6 days. Can that trajectory continue? What do you foresee?
Well, firstly, there aren't any known resistance levels, Karunya, as far as I see the listing on the NSE. So all-time highs, the way I see it, and like very validly you pointed out, last 6 days. In fact, in the last 6 months, it's doubled, Karunya. So fresh buy, I don't think so. But yes, if you have a position, hold, because no negative divergences yet, no reversals, no levels breaking. So clear blue skies can surprise on the upside.
Okay. On the other hand, you have a stock again from the mid-cap space, TTK Prestige, which has been slow and sluggish last many weeks now. Prahlad wants to know your view. So tell us, what do you see there on the chart?
Long-term charts indicate weakness. I believe in terms of levels, we've just broken 860, which was support. The next level comes in at 820, and the important one is between 740 and 760. So intermediate downtrend, longer term clear weakness. So I'd stay away till 760 at least. So looks weak, should go there.
Okay. Again, another name that I want to highlight, we rarely ever discuss this, Oracle Financial Services, OFSS. Dinesh wants to know your view. So please go ahead and tell us. What do you think?
Well, IT has been a disappointment, but way back in January, it had given sell signals. OFSS has underperformed even before that. Having said that, medium-term bottom, yes. Longer-term bottom, not yet, but it is trying to stabilize. Range is between 2,800 and 3,300. So if I would take a slightly longer-term view, I would be sanguine. But till 3,300 doesn't get taken out, goes nowhere. It's going to take some time for this to play out. But yes, once again, slightly longer term view seems fine. Medium term view, it's a sell on bounce.
Okay. Raghav Sood wants your advice on Sumitomo Chemicals. Now, this is one stock that I know for a fact that Moneycontrol Pro is quite optimistic about from a long-term investment point. But how is it looking in the near term on the technicals?
Longer term, yes, I'd go with what Moneycontrol Pro is saying, Karunya. Once again, with limited data, very clearly in a long-term uptrend, good-looking chart. Near term, yes, we are in a shorter term uptrend above important moving averages. Medium term, we walked into a correction where it came up from 540 to 445, almost 100 points. And now we are trying to claw back. So short term positives, medium term recovery, long term clearly up.
Okay, all right. How about Tata Steel? Abhijit Kumar wants your view. And Tata Steel, despite the bounce that Nifty Metal Index briefly saw, this one hasn't moved much. So tell us what lies ahead in the next few weeks or months, perhaps.
Well, frankly speaking, ever since split has come in, Karunya, the face value split from 10 to 1, you're absolutely right. It sort of lost its sheen a bit. So the movement has been dull and slightly ragged, Having said that, we are looking at a medium-term positive. Nothing spectacular, but yeah, 105 is important. As long as that doesn't break from a closing point of view, things are positive on the weekly chart. Yes, if we close above 115, then we see some more traction coming in. But you're right, has been a lazy sort of a stock.
Okay. Hemant, before we wrap up, I also want to know what are the stocks that you are keeping on your radar and that perhaps would like to recommend to our viewers too.
Firstly, a buy on GNFC. The only hitch is that it keeps on getting into the FNO ban. It probably is. So, we're not recommending FNO, but yeah. So, buy on GNFC. It's on the verge of giving an upward breakout from a downward slope, slanting channel. Mechanical indicators are in buy mode. So, buy GNFC at 595. Stop loss 580. Target of 625. Secondly, a buy call on HDFC Bank. HDFC Bank has been looking promising for the last 4.5 weeks. Level was 1640. Now we've taken that out. Okay, the week is not yet over and it's a weekly level, but even then, very clear long-term uptrend. Underperformance should play catch up. So one can buy HDFC Bank at 1645, stop loss 1620, target 1695. So modest target. I believe it should get overshot.
Okay, great, Hemant. Thank you so much for sharing your advice with us. With that, we're going to wrap it up right here on Morning Trade. Many thanks for tuning in.